As we look toward the end of the trading week and look toward the new trading week, the New Zealand versus U.S. dollar acted like some of the other currency pairs in trading. We did see the pair move higher midweek off of the CPI data and then come off toward the end of the week, and the sellers remain more in control. I'll talk about that in this video, so let's get started. Quite frankly, the price action this week was up and down volatile, but I want to start off by taking a look at the daily chart just to see where we're at. And you can see that since this high, I guess in September, the price has been on a steady move to the downside. And the low price that we saw this month in January came down toward the 0.5539, as a matter of fact. And then the price rotated back to the upside and trading on Wednesday. As mentioned, the price high was reached off the CPI data and then rotated back to the downside. And that low price that we saw in trading here today came down to test this low price. We're dealing with old lows back here going to 2022. Those are the progression steps. Those are these levels outlined right here and right here and right here and then right here. The low price from 2022 comes in at 1.0 or 0.55109, and we haven't quite reached down to that level, but we've gotten within about 30 pips, I guess I should say, of that low. So that's going to be a key level in play as we head into the new trading week. Now, that's okay. We know that the trend is lower in the New Zealand versus U.S. dollar trading near lowest levels, but the hourly chart is going to be where the trading places take place, and where if the buyers are to start to take more control, it would manifest itself with clues from the hourly chart. When I look at this chart, you can see the misbehaving nature of the price action here, especially in relation to some of the technical levels that we have outlined here. Everyone knows that I like to look at the moving averages, and when the price starts to move above it and then comes down and holds support against it here, and then that's more bullish, and that's good sign. But then we break above the high right here of the 100 bar moving average on the 4-hour chart, and we reverse quickly back to the downside on Wednesday. This is off the CPI data. We do the same thing on Thursday. We do same thing later on Thursday. And in trading here today, though, how we did find willing sellers against the 100 bar moving average on the 4-hour chart. So there's been good times and bad times where the price has paid attention to things like the 100-hour moving average right here and the 100 bar moving average on the 4-hour chart right here. But other times misbehaving right here and here and here and here and here and here and here. All those levels where the price sort of made a break and then failed rather quickly. Nevertheless, what I can say about this price action is we are below the 100 bar moving average on the 4-hour chart. We are below the 100 and 200-hour moving averages as well. So the sellers are trying to put a move on the market, try to take or keep control in this pair, and going into next week, if we are able to stay below these levels like we did in trading here today, then the sellers remain more in control. We can expect more downside momentum. If the price were to move back above the 100 bar moving average, even though we've seen all these failures, I still have to respect that move, especially in light of the fact that the 100 bar moving average on the 4-hour chart held resistance not once but twice in trading here today. Moving back above that level would be a signal that the buyers are taking back some control, even if it is in the short term, and we could expect further upside probing with perhaps a move back toward this area right here, where we had a number of different swing highs forming this ceiling. We moved above it a couple times, but then stay below that level. So getting above this level and then getting above the 38.2% retracement of this move to the downside would be the required moves for the New Zealand versus US dollar to show that the buyers are taking back more control in a progressive fashion. Okay, but it's until the price starts to get above those levels that starts to kick in. Absent that, and the sellers are more in control. On the downside, we do have that low at 0.5510 to look toward. Again, that comes off the daily chart and represents the low price that we saw going all the way back to 2022. If we break below that level, opens the door for more selling in the New Zealand versus US dollar. So that's my look at this currency pair as we head into the weekend and into the new trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.